host on the Red Couch. Hey, Keith.
Hey, how you doing, Paul?
Good, thank you. Once a week we keep you around and we ask viewer questions.
And I love it.
This is my favorite thing that we do. So here we go. First question says this: I am really nervous about the market right now. Should I buy gold? And we see those commercials, people selling us gold all the time.
Yeah.
What do you think?
You know, gold is a true phenomenon because it normally is an inflation hedge. People have been buying it as a catastrophic hedge. But it's really not that, because it doesn't hold up well. In 2008, when the market crashed, gold didn't hold up very well. Gold is going up now because it is primarily a currency hedge. People are buying gold as a third currency. Every time the U.S. prints dollars, it lowers the value of the U.S. dollar. Every time the ECB prints euros, it lowers the value of the euro. So people are buying gold as a third currency. That's why gold is moving. So don't buy it as a catastrophic hedge. It's not going to hold up well if the market crashes.
Okay.
Don't buy it in a deflationary environment where we are. It's a currency hedge.
Well, and you project the bigger problem that we're likely to have is deflation, not inflation.
We have a deflationary problem right now, without doubt. We're definitely in a deflationary period. We don't have enough spenders. We have probable inflation if we keep printing money, but that's 3-4 years down the road. We've got deflation for a while.
Well, we're a little time left for the other question. It says, where can I get more income in this low interest rate environment? Banks are paying 1% if you're lucky. What do you do?
Well, you got to get out of the bank. You've got to do something. Everybody needs to go out there and find some sort of return. The idea is not to take too much risk. Invest for need, not for greed. That's the key.
Give me a for instance.
Well, there's some preferred stocks, there's corporate bonds, tax-free bonds that are out there. You're not going to get a big yield, but I'm still finding 6, 7, 8% in preferreds, MLPs, corporate bonds, that kind of thing. A little bit more risk, obviously, than the bank, but you can't sit there, because remember, in the bank, you lose money every day to inflation and taxes, so you got to get out of the bank.
You okay with hunting dividends?
You have to hunt for dividends. That's what we do for our clients.
All right, thanks very much, Keith.
All right,
nice
great to be here.
If you have
Thank you.
Questions for Mr. Springer, send them to money@fox40.com, and maybe he'll be answering your question next week on a Red Couch here. You can also call him anytime during the day. He'd be happy to chat with you. 916-925-8900. Coming up, he's the popular WWE wrestler caught in the middle of